Hello, everyone. Welcome to the weekly market report of FTFX. I'm going to give to you just a summary of the week. Particularly, we're going to talk about central banks, Federal Reserve and BCE. It was a busy week following what was the last update of the Federal Reserve, the last words of Jerome Powell. They keep the monetary policy unchanged. And he made few statements, few comments, very interesting for financial markets. Following by Thursday with the press conference done by the Central Bank of Europe, Christine Lagarde. We're going to also review what was the last comments done by Christine Lagarde and how that could affect the market. Nothing really unpredictable. It was just a rise of 25 basic points on the interest rate, something that we was really expecting considering the interest rate on European area, plus the inflation rate, the current inflation rate. So nothing new about that. We're also going to make a quick update on energy markets. Very interesting article mentioning how China is gaining influence in Iraq related with the investment in infrastructure to explode a new oil sources in Iraq in relation with or in business with another companies, local companies there. Very, very interesting topic. And we're going to end talking about crypto market, crypto industry, how exactly it's going, the crypto industry. So far this week, and also Coinbase, the case of Coinbase, the last suit issued by SEC, the regulator, the local regulator in US, and what was the reaction of Coinbase? Maybe you don't know. I didn't know that until I was researching about the topic. But Coinbase, even Coinbase, sued a case against. They took to the court to the SCA, to the regulator, in a way or strategy to force them to start to set up a new regulation in regards with crypto digital assets, let's say, right? Very interesting topic because we're going to also mention what's the position of the G7, the West countries alliance, versus what's the position of the BRICS in this regard. So let's go to the topic. Let me share with you the screen. Oh, obviously, first thing, risk disclaimer. The information has been prepared by Gonzalo Cañete, Global Chief Market Strategist, for general information purpose only and is not indicative of future performance. AT Global Markets UK, ATFX UK, is not responsible for its accuracy or completeness. The views expressed do not reflect those of ATFX UK. This information does not take in account your personal circumstances or objectives and should not be construed or relied upon as financial investment or other advice. You should seek independent advice before making investment decisions. Reproduction of this information is whole or in part prohibited. Now, first topic of the week, it was the Federal Reserve. I actually shared on my social networks on Monday that it was a busy week because we got two of the top 5 biggest economies in the world, two central banks of those economies making statements on Wednesday and Thursday. And in this case, we're going to make a summary of what exactly Federal Reserve was sharing with us. So the U.S. Federal Reserve's last monetary policy report to Congress states that inflation in key parts of the U.S. service industry remains elevated and may depend on a further easing of labor market conditions. It's something we know. It's something I mentioned also in the previous report that if we want to know what exactly it's going to be the evolution of inflation rate, we just need to follow up what's the evolution of the labor market. Because based on economic rules, labor market and inflation rate are related, inversely correlated actually. Wage gain have slowed over the first part of the year, but remain above the pace consistent with 2% inflation over the longer term. Bank lending has thickened notably, but the banking system remains sound and resilient. The report comes on the heels of the central bank's late policy meetings, where it opted not to rise interest rates, attention please, not to rise interest rates, for the first time since March 2022. The Federal Reserve decided to do not continue increasing the interest rates. Investors expect the Federal Reserve to resume rate hikes when it meets again in late July. The expectation of the market is this gonna keep in place. It's gonna remain unchangeable for the next coming meetings. Two policymakers struck of hawkish tone in the first public comments of the intermeeting period, acknowledging that banking system conditions are not as benign as they were in March. So the banking system conditions is getting it's getting worse comparing with the previous months, and that's why they should keep a strong position in terms of what should be the discipline of the monetary policies. However, ongoing stresses in the banking sector may weigh on credit conditions. And this is something we know, and it's something we also mentioned that, let's say, the Federal Reserve, by holding the interest rates rise, right, and do not continue increasing the interest rate, what he's giving is more liquidity to the system. We also know that the increase of the debt ceiling was actually helping to the economy in terms like the market was responding really well to that decision. The agreement between Democratic and Republican Party to get a deal in terms of the increase of the debt ceiling. But, however, as we mentioned also, the TGA, the Treasury General Account of the government, is refilling by issuing new bonds based on this new agreement on the debt ceiling. And that means that it's getting taken from the interbank system funds that it was, in other case, available for bank system. Therefore, it should be generating more stress in the bank industry after the deal of the debt ceiling, right? Let's move on to Central Bank of Europe. What was the main points of the speech? I just bring to you a comment published on Reuters from IMF. So International Monetary Fund has urged the European Central Bank to continue to raise rates and Eurozone governments to slash budget deficits to help it and increase fiscal breathing space for later. So the main urgent, again, from IMF, and this is something that is really common from IMF, is just keep saying to Europe, especially to Europe, press, tie your belts, right, and cut the expenditure, especially after COVID. After COVID, we have seen a massive fiscal expenditure, right? It was like in conjunction with the monetary policies, the fiscal policy was basically print out money by the monetary policies and also facilitate for economical agents, families, companies, credit. And this is more or less what happens, right? In the cases of some countries in Spain or in the rest of Europe, we're rising a lot the public expenditure. If we check also the deficits in European area are massive. It's even public debt is around 100% of the GDP, which is a disaster compared with the previous years. And obviously, the worst scenario if we compare the financial crisis from 2008 to until now. I mean, today we are less ready for a financial crisis like we were in 2008. Basically, for example, national debt, public debt of France is it was around 40% by then, and today it's almost 100% of the GDP. Anyways, let's keep going with the main points of this article. The ECB rises borrowing cost to their highest level in 22 years on Thursday and said strongly high inflation all but guarantee another move next month and likely beyond that too. This is also a surprise. Why this the head of the Central Bank of Europe, Christine Lagarde, why she will compromise a new increase on the interest rate by 25 basic points for the next meeting? Why should take that responsibility or that step to say in advance what she's going to do? It's a strain. I mean, they usually do not play the cards in this way. They usually keep their cards hidden, and they don't try to show us what's going to be the next step. But still, she did. She said that, and she can say whatever she wants because they can change the rules over the course of the game. I mean, in a month they can say, you know what, we just change our mind. We think it's not the right moment to keep rising interest rates or whatever, depending on the evolution of the market. Now they probably feel brave because European markets are touching the top maximums, historical maximums in DAX or CAC in the case of France index. But it was different. So the IMF also called the European governments to complete the ongoing reform of the bloc fiscal rules, which were put in place to prevent excessive borrowing by governments. Yeah, of course. Let's come back to the rules pre-pandemic, right? That's probably the goal. Germany and France remain over whether there should be a minimum annual debt reduction obligatory for all And this is also a typical case in Europe. German policy usually is more try to control the fiscal expenditure, try to cut public expenditure, while France is the opposite. France is trying to expand the activity, the economical activity by public sector. And again, a swift agreement on the reform of the European economy on fiscal governance framework will support fiscal sustainability over the longer term. Yeah, moving on to the energy markets. China in business with Iraq. China has gained a significant foothold in Iraq through a series of oil and gas deals and public infrastructure development deals. Under the 2019 oil for construction deal, building projects in Iraq are funded by the state of 100,000 barrels per day of Iraq oil to China. So it's basically the main partner that Iraq goes today in terms of trade is China. The influence is obvious. Beijing has become one of the largest imports of Iraqi crude, accounting for 44% of Iraq's oil exports in 2021. State firm PetroChina has partnered with France Total Energies and Malaysia Petronas to explore the Halfaya oil field in southern Iraq. Despite concerns that infrastructure projects could leave Baghdad in debt, China is expanding its presence in Iraq, particularly in the energy sector, to fill the gap left by the lack of foreign investment. Iraq is among the many countries participating in the China Belt Road Initiative, BRI, construction contract. So it's a part of the expansion of China empire. The Road Belt Initiative basically is a kind of the biggest free trade deal in the history. And in this case, we can see how this deal is also it's also included energy strategy contracts. Now, a quick screenshot of what's the evolution of the prices. This is a weekly candle, right? So we can see that since the last year, we are just see a massive drop in most of the oil energy sources. We got a crude oil, mainly gas and crude oil, got a massive drop down there. The WTI, it's quoting by $71.24 per barrel. Natural gas is at 2.61 also, coming from almost 10. And yeah, in general terms, rest of the derivatives on oil are there on the screen, and you can see that is just dropping. Brent oil is by almost $76 per barrel, but in general, we can see that the energy is reducing the cost. This is helping also the inflation to keep low, because we know one of the most inflationary assets is the oil and the gas. I mean, the energy cost of the transport and so on. And just by the ending this report is just the G7 crypto bottle. So this is the battle between the BRICS and the G7 in terms of regulation on cryptos. The G7 is attempting to create a regulatory framework to control digital assets, including digital security, data protection, and money laundering. International rules have already been accepted, such as the travel rule and KYC policies. The travel rule basically is like you cannot transfer from one exchange to another wallet more than $3,000 without identification. Now, CeFi and DeFi is divided to the crypto assets industry in two camps: centralized exchange controlling by regulatory authorities, and decentralized exchange and financial services, DeFi, basically by definition. DeFi decentralized, so they are not controlled by any authority. The DeFi industry is working on a KYC policy to keep user privacy intact, such as the fractal ID project. Is one of the initiatives just to try to generate a kind of ID that you can use in Web 2 and Web 3. I mean, like it's compatible with both worlds. The world that is regulated, the CeFi world, and the DeFi world in only one app. Okay. What else? Existing regulations have left out any reference to free and decentralized DeFi financial services. The SEC has launched lawsuit against the two of the largest asset exchanges, Binance and Coinbase, to reassert its legal power and establish a legal framework in the crypto industry. The only The only issue with this is like they try to establish a kind of uh, f- regulatory frame, right, or legal frame based on just punishing the crypto exchange. Coinbase also sued the SEC, possibly to force a response to its request for regulation. The impact of these legal battles on the crypto asset industry can be measured by analyzing the evolution of the largest listed exchange, Coinbase. Well, last thing I want to share with you is just this chart. So in the Coinbase, it's in a very interesting levels, around between $50 to $54 per share. And as you can see, it's in a range that the top of the range is even getting closer to $80. And it's just a kind of one of the options, one of the goals, $80 per share from 54 right now. And also really close support below 50, like 40, 49, 50, 50. That could be the really close support. Trying to target $80 per share, but also if you take a look on the chart and you got some experience, you will recognize there are kind of bullish pattern, shoulder head shoulder inverted, that could give a target between $160 to $200 per share, which will be amazing. Consider that it's coming from higher levels. That recovery on the price of this will be wonderful. In terms of Bitcoin, we also follow the Bitcoin. It's showing some weaknesses at the moment, but still it's in a bullish trend in long term. And Bitcoin has been doing really well during the last few months, regardless what the market were doing. We saw that finally, after all, there is this correlation between Bitcoin and the financial assets in terms of while the Standard & Poor's were falling, Bitcoin was just keeping lateral or even rising in a few cases in the last few months. So this is really an exception and an exceptional event, and we're gonna keep eyes on that because obviously it's a very interesting situation right now with the Bitcoin in financial markets. All right, I think that's all. Thank you. This is my contact. This is my email if you want to contact me back or keep in touch. And hopefully, I will see you next Friday again in a new weekly market review. Hopefully, with new content, more live. I want to include on these reports, videos, interviews, and so on. But yeah, today it was a very busy day, and I did my best to get this report done. Okay. Take care, guys. See you next Friday, hopefully. Bye-bye.